look at the Nifty 50 heat map, barring just Reliance, ONGC, the energy stock, which is down almost, from 0.4 to 0.5% or so, the rest of the heat map looks fairly comfortable this morning. Markets not taking too badly to the latest 50% tariff that Donald Trump has announced on India. Feroze Azeez, good morning. Thank you for being here with us. Nothing unsurprising, so to speak, because every morning you wake up or every night before you sleep, there's something new that Donald Trump says. Markets seem to have become fairly used to expecting the unexpected from Donald Trump, isn't it?
Good morning, Kartik. Yes, markets are used to this. See, I personally think it is not markets. I think we have to break down markets into different categories of participants.
All right.
There is somebody might be fearful, somebody might not be fearful, somebody might have compulsions to be in equity, some people might have discretionary mandates, some people might have not have discretionary mandate. Retail is managing his own money. Market is represented by different characteristics of different groups of people. Why is market not reacting? It's not reacting because FII has already reacted. FIIs the discretionary mandates had quit India in the last 1.5 years. All discretionary mandate money is out. All by which I mean upwards of 90% of FII money is out. Anybody who does discretionary derivative trades is 92% short. Right? DIIs can't sell because they're getting SIP money of 27,000. A scheme, a fund manager, if he gets an SIP of 500 crores in that scheme, and if he has to sell a stock, he has to maintain more cash than what he got. So he can't sell. Fourth, any FII who's an index fund investor is not selling one share and can't sell one share unless Trump's rhetoric makes a redemption pressure on a Vanguard, for example. That's not happening because he follows FTSE and Vanguard is not selling India. So who will sell is the entire hypothesis on which on your show over the last 10-15 days I've said it can't fall. Now you move your head towards the derivative indicators. You look at the implied walls at which puts are trading. You're able to buy a 23,000 put of Nifty of next week at 2 rupees, right? That is very clearly an indication that the entire barometer of the total market sentiment that they need to hedge Trump's action. If I have to hedge Trump's action, then a put option can't be available at 2 rupees of 25,000 notional value or 24,500.
That's right.
That's one barometer I'm telling you. So net markets will not react because he's only trying for Indian markets to react. Trump is only doing this panic so that markets fall by 5% in India. Then we come on the negotiation table,
Right.
is what I personally think is.
Yeah, I
objective.
seem to agree with you, Feroze, and that is something that we are seeing on the charts as well, because right now, as we are speaking, while markets had opened lower, they are climbing up slightly. So for all you know, investors may eventually end up feeling that perhaps, yeah, this is all at the end of the day something that Donald Trump is not going to see through and go ahead and continue buying at better valuations. But I want to specifically come to you now with the section 232, which at least as things stand right now, exempt stocks or rather sectors like pharmaceuticals, electronics, semiconductors. Let's pull up the Nifty 500 electronics pack and see what we are really getting over there, because we are actually seeing companies like Dixon up in trade this morning, even though there seems to be a bit of a threat of 100% tariff which could hit the electronics sector. What is your read on that, Feroze?
See, the exempted sectors have a total export of 15 billion out of the $81 billion export which we saw last year. So I personally think that's 20% exempted. I rightly feel that I personally feel that these sectors will be isolated. Of course, Trump again said the pharmaceutical will have 250% tariff in the next 2 years. I'll take it there. Now that's. If you hear Charlie Munger in 2011, when somebody had asked him whether you want Donald Trump to be the president, he says, never the last person on the planet I want, because of two things. He is Wayne. He used some very, very good phrases to puffery was one very, very strong word he said. Everybody reads through that puffery. So coming back to your pointed question, the sectors which are currently exempted, pharmaceuticals, semiconductors, I personally think they will remain exempt category. There'll be more threat. He's not exempted it because he likes these sectors, because he knows that will hamper his economy more than ours.
Absolutely.
And that's 20%.
Right. So he needs those sectors more than perhaps those sectors need the US market, or if not, at least in equal measure. So I agree with your analysis there, Feroze. But I'm also seeing that this morning, despite yesterday's wake-up news of the pharmaceutical sector at some point being slapped with as much as 250% tariffs eventually is again looking at some value buying this morning. So look at the stocks of Cipla, for example, even Dr. Reddy's, which is flat right now. These are sectors, Lupin, for example, is up about 5% or so. So are pharma sectors now reacting a little positively to this news that at least for the foreseeable future, until another rate is decided, they continue to be in the exempt category?
Yes, Kartik. I think there is going to be value buying in a sector which delivered a 28.5% growth in the last financial year, but didn't see any price action too much, right? 28.5% was the highest quartile earnings delivery after capital markets for the last financial year in Nifty. Of course, the weightages are very low, 3% in Nifty, and NSE 500 is just about 4% weight. So you're absolutely right. The price action has not come in these sectors. Earnings action has come. This quarter, we've already seen 11 of the 20 having given results. 4.1% is the growth, not so good. Of course, 9 more stocks to go in Nifty Pharma to deliver the results. So I think there is going to be value buying, and that's a bluff which the market does not want to buy into, is what I personally believe.
All right. And before I let you go, Feroze, your view on one of the scenarios that we were discussing prior to you being included in this conversation about one possibility, scenario 2, we were calling it, of India reducing, if not completely stopping importing Russian oil. It seems, at least as per the experts that we were speaking to earlier, as an unlikely scenario. But what we are seeing on the charts when it comes to energy stocks this morning is still a little bit of negativity. You're seeing Reliance Industry is down almost half a percentage point. ONGC, IOC, BPCL, HPCL, pretty much the entire energy pack seems to be feeling some sort of a pinch right now when it comes to investor action on those companies. Are investors getting a little jittery about the scenario 2, which we believe was unlikely, but are investors getting a little jittery about discounted Russian oil flowing into India?
Yes, Karthik, I think, see, there has to be some line of retreat for the president to be given. If you don't give line of retreat, how would you actually de-escalate the situation? So I think that's going to be a face-saving exercise for sure, which India has to provide for after it has escalated to this level. One. Second, earnings of last year for Nifty Oil and Gas has been minus 33.2% last year. And this year, fortunately, this quarter, 8 out of the 15 companies have given results. There is 18.9% earnings growth on a lower base. So to answer your pointed question, there is going to be some degree of collateral damage to Russian oil being imported at a lesser quantum than it used to be, for sure. Otherwise, you will never be able to de-escalate this trade war.